with globalfxclub.com. Please take a moment to look over the risk disclaimer, which should now be on your screen. If you are watching the recording, please take a moment to pause the recording and read our risk disclaimer carefully. Then we will get started. All right. So we had just a bit of news out not that long ago at 9:55 a.m. Eastern Time, so about 8 minutes ago. We had the University of Michigan consumer confidence data, and it was a pretty big miss. I think it printed around 71 versus 78 expected. It's the lowest print since December of 2011. So not great news from the consumer confidence front. Most likely culprit is the sequester talk in Washington and the fact that we can't get a budget deal done here in the States. We also had stronger than expected or higher than expected consumer price index numbers out of the United States, so higher than expected inflation, led mostly by energy. Dollar fell on that news, which is a little interesting. It said to trace most of those gains as U.S. equity markets are trading lower here early in the session. So that's where we stand today. All right, so right now we have a euro-dollar request and a dollar-yen request. 2 euro-dollar requests. I'm going to start with dollar-yen. So here is my dollar-yen daily chart is currently posted as it's labeled. I've posted a lot of tweets about this chart. First, you can see here, since we started this rally, since here, in November of last year, when we closed above this 14-day EMA, we've pretty much ridden it. Pink is 14, red is 50, green is 100, orange is 200. We've ridden 14-day EMA pretty much the entire rally. You can see we rested on it here, we touched it here, we touched it here, we touched it here. We dropped below it on that really weird gap and die candle. We got back above it, we retested it, we're trading higher. It looks like we're playing here on the daily chart. We're trading pretty well above this 14-day EMA, which is one of the reasons I think, technically speaking, we haven't broken any higher on euro-dollar. Letting some of these overbought conditions here on the RSI, letting this extended move away from this backbone of the rally sort of sort itself out before what I think will probably be another move higher. I like trading dollar-yen to the long side. I prefer to wait for a breakout or trade a test lower here. This 94.50 to 94.75 region, where we have these previous horizontal highs, previous resistance turn support. I wouldn't mind buying a dip down to those levels. If we get a daily close here below this 14-day EMA and below these support levels, that's when I'd start to get wary of being long dollar-yen. I do think at some point we're going to have another sort of this candle going lower. I think that whenever you have this sort of rally, these quick sell-off candles are inevitable. The question is whether or not it can, once we get one of them, if we can develop any momentum to actually get a real pullback. You see, this was bought up immediately, so we'll see. So always when you're trading the yen pairs, it might not be a bad idea to keep your leverage a little bit lower. They've been really quick moving of late. So that's what I'm looking for on dollar-yen. Either a little bit more sideways before a move up, or a quick dip down to this 94.45, 94.75 region for a trade up. Euro-dollar, a little bit more complicated in that there are lots of different ways to view it. This is the 4-hour chart. I'm going to delete my lines and start from the beginning, just so you can see what I'm thinking on this pair. So I'm going to jump out to the daily chart for a minute here and start really from the beginning. Here we have what I view as an inverse. I'm not the only one. There's a lot of people who have been calling this left shoulder, heads down here, right shoulder is kind of exaggerated in this area. Depending on how you draw your neckline, this is how I choose to draw mine. That dip down to basically 129 is a retest here of this neckline. So I have a touch here, a false break here, a touch here, and another touch here. So a fairly significant trend line that we've rallied off of. All right, so this, if you look at it this way, we're setting up for a move back above 130.50, back towards 140 on the daily chart. Now, you can also say that what we have right now is a potential head and shoulders for a regular head and shoulders forming here on the daily chart. First, we had one. This is a head and shoulder. It played out perfectly. Left shoulder, head, right shoulder. We broke the neckline. We did the measured move, and that's where right around where we're sitting now. Now, you could argue, and I think you would be certainly the potential that you'd be correct, that this head and shoulders is really a complex, larger head and shoulders. So this head and shoulders is basically the head of a larger head and shoulders here on the daily chart. And now we're forming a lower off-center right shoulder. So should we basically break this level here, call it basically the same 129 here, 120.75, that opens up a significant lower back towards 125, 124. So that's the daily perspective. We kind of have two technical setups battling out right now. So if we jump down to the 4-hour chart, we'll see what's going on a more shorter term look. All right, so today we've had this impressive rally from euro dollar. I would view this, it's not the greatest trend line drawing, but this seems to me like a breakout of a fairly long-term downtrend 4-hour line. This is also the 50-period EMA. It's been relatively significant. We popped above it with a nice, big, impulsive stop-grabbing candle. Fine. So now we 4-hour closed above it. We might actually get a retest later today as it starts to retrace. So this is a more bullish way of looking at it. So this was the inverse head and shoulders neckline retest, and targets are way up here. On the other hand, if you draw a trend line here, rather than a trend line break, what we really have still is kind of an awkward shaped bear flag. So this is a challenging pair to trade right now, in my opinion. I think there's great potential in either direction. I don't know what direction that would be. The trade setup that I like that's most likely to happen sooner rather than later is a close above 131. So up here, out of this flag area, then you have to compete with this 200-period EMA here in orange. But if we get a close above here, you at least get a clean setup for a long to look for 132, base 133 at this flat cloud bottom and previous horizontal support turn resistance. So that would be the cleanest, most likely trade to occur sometime next week. It's a possibility for about a 200 pip long up to resistance here. We'll see. In terms of a short possibility, if we manage to close here below these lows, I like the odds of us moving a little bit lower first before we rally higher. The other thing about this long setup is if we rally back to 133, this is basically the neckline of that original smaller head and shoulders. So that could just be a neckline test before lower. So the moral of the story is that euro dollar is really complicated right now, and I would be when and if I trade euro dollar, I will be looking to get my stops to break even quickly and then just sort of ignore the trade for a while and see if it goes in my direction. I'm not going to try to overtrade euro dollar because there's not a great amount of clarity in the pair. So while I think there are good trading setups, including along from 130.70, I would prefer it around like 130.40 or so. I think that's a good setup. It would basically be a retest here, right around 130. I think that's a good trade possibility. But if the market's looking at it as this rather than this trend line, it's likely that we'll continue down to about 129.40. So we'll see. We also have a lot of headline risk in the EU right now. The Eurozone summit is currently going on. We have issues with the Cyprus bailout. Italy is trying to form a government. As far as I know so far this morning, with little success. So those are all concerns out of the Eurozone. But with concerns comes the opportunity to resolve concerns, and then we get a pop higher. This euro-dollar rally has not been euro-based. What I mean by that is there's nothing on the Eurozone that says buy the euro. This rally is based on dollar weakness. Concerns about the Fed extending their easing program. This risk-on environment has hurt the dollar. That's what this is about. This is a non-euro specific move. As you can see, we've rallied higher in Kiwi. Aussie's been relatively strong. So that's where I stand on euro dollar, is cautiously neutral, I guess. I think there are good setups in either direction. I will be willing to take those setups, but I will be very aggressive in getting my stops to break even. All right, so I've covered the 2 questions that I've gotten. If you guys have more questions, feel free to put them in the box. I would encourage that, so I have things to talk about. Let's see, until that. All right, Jeff asked about pound Kiwi, and I got a big long question by Jeff pound Kiwi, Josh big question. Okay, that's actually a good question. Jeff, I will get to pound Kiwi. That is on my list. Josh, I'm gonna actually show you a good there's actually good examples of this going on right now with the pound. Okay, so let's say you got long pound dollar here on this 4-hour breakout. All right, so we have this line. We broke out. We closed higher. So you got long here. You put your stop right below here, and then the pair starts marching. Great. So what do you do? Let's say your initial stop was 40 pips. What I like to do is when if my initial stop was 40 pips, once I'm 40 pips in the money, so somewhere in this candle, I move my stop to break even. All right, just to eliminate risk and let myself sort of start to ignore the trade a little bit. As we're up 60, 70 pips, I take off a quarter or a third to book something, so somewhere around this candle. Then if we squeeze a little bit higher, I take off some more. So then if I have my last third and quarter, Josh, what I do is I put in a trailing stop. So I trail like a 25, 30, 40 pip stop. And that way, when it starts to do this, we have this rally up to 145.83. We close in what's kind of an ugly hammer candle that's being confirmed now. I would have probably got my trailing stop, probably would have triggered right around here, saving myself some of these pips. It depends on what your initial stop was and what your target was. So if you were targeting, like if you had an initial 50 pip stop and you were targeting 300 pips, once you're up 100 pips, your stop should be at break even. And if you trust your targets, you should probably just be ignoring the pair. And if it corrects, and that's the deal. But if you trust your targets, you know, leave it open, maybe take some profits, and then just trust that the correction is just that, a correction, not a reversal. Just keep looking for setups that suggest it might be a top. So like some topping patterns are head and shoulders, double tops. So keep your eye on shorter time frame charts, and if you see what would be a topping pattern, then maybe you want to close your if it's a long trade, you want to close your trade. But until you can just, as long as you can just view it as a correction, you just have to trust your setup. Take some profits so you book something, and then trust your stops as best as possible. All right, so I hope that's helpful. It's a challenging question. The best way to do it is just take profits along the way, and that way if some of your position gets stopped out at break even, you at least book something on every trade. Pound Kiwi. Speaking of potential reversals. So here we had this pound breakout, broke out really nicely, stuck around for a minute, then took off. This 4-hour candle, let me make my chart a little bit bigger, is a little concerning. We have this resistance here, this previous top, and this 200 period EMA on this 4-hour chart. We've been a very ugly, again, hammer type candle, rejection off this resistance 200 period EMA. This would be, I would have taken some off of this trade here, well, as I hit resistance. I didn't, once I saw this candle, I would trim a little bit and trail my stops a little higher. The question now for Pound Kiwi, I think, is going to be the pound versus, it's going to be more about Kiwi than about the pound. I think we had our pound squeeze higher. I think the pound consolidates or dips a little bit in the next few days. And the question will be whether Kiwi and risk fail. If the Kiwi starts moving lower, I think Pound Kiwi will continue higher. We need to clear basically 185 to open up a lot more upside. This whole area here is basically 100 pip range is major resistance. So I'd be keeping an eye on that. If we manage to break these highs, that would be a good sign. If you shorted up here, that would be a great short opportunity. I would get my stops to break even and ignore this, and then just ignore it and hope it pulls back. I would be watching for opportunities to get long again, down around 182.70 to 182.20 or so. This fib and moving average support area would be a good opportunity to try new longs. But as of right now, I would be sort of neutral on this pair. I don't want to trade it in either direction. The opportunity to short was up here. The opportunity to long was down here. So right now we're kind of stuck in the middle where your stops would need to be a little wide on either side. So I'll watch. I'll hope for a nice consolidation pattern so I can trade a breakout higher. That would be an ideal situation. So that's where I stand on Pound Kiwi. It's currently trading. It's currently respecting the significant resistance, and I would expect it to consolidate or fall back a bit here before another potential move higher to around 187.50 or so would actually be the next level I'd be looking at. Other questions? Aussie dollar, sure. I like Aussie dollar. Not in the way that Aussie CAD. Right now I hate Aussie CAD. I also have it open. I will look at it though. So Aussie dollar and Aussie CAD. I think there is a little bit. I think there should be a little bit of concern about these employment numbers that we had earlier this week. If you remember, Australia reported like absolutely spectacular employment numbers. They said they added like 74,000 jobs. The expected number was closer to 10,000. So this is basically this candle here. That is Australian employment in a candle. The concern that I have is a lot of Australian economists are saying that this is a sampling error, that the Bureau of Labor Statistics, or whatever the Australian version of that is, kind of ended up with a fluke sample, and that the revision down next month is going to be nasty. So I would be cautious about that. The market has not been affected by that right now. But if we get like a 30,000 job reduction in a revision next month, that is going to sting Aussie pairs a little bit, I suspect. But we got a while until we have to deal with that. So let's take a look at the technicals of Aussie dollar. This is how I view Aussie dollar. All right, so we had this longer term trend line back here that we broke out of here. And since this breakout, we'll call it even this candle here, 102.80 or so. So we've rallied just about 100 pips in a nice clean channel. I am watching. So here's I just came out to show you where I drew this fib. It's from the 106 basically highs to this nasty reversal candle here, the 101.15 lows. That is where these fib levels come from. All right, so right up here at 104.13, that's the 618 fib. We also have this channel top and cloud bottom here. We're under the daily cloud. This is the daily cloud. I have the daily cloud on my 4-hour charts, just so we're clear. It's a bearish future cloud. We're below the cloud. It should be decent resistance, especially when combined with a fib level. So I'm very interested to see CAD yen noted. Very interested to see how we react when we get up here to 104.13 or so. I like shorter term trades on the Aussie. I think the daily chart is a little bit confusing. We'll see. I like trading a breakdown out of this channel for a move back lower. And I like trading, if we break above cloud, I like trading longs looking for 106 again. And then we'll see what we get when we get to 106. So I'm keeping a very careful eye on this 104.13 level. Yeah, this is absolutely an inverse head and shoulders pattern, Eduardo. That's absolutely. We've basically completed the measured move from this inverse head and shoulders pattern. So that's another reason to wonder. But these do often represent bottoms, so it's possible that we will continue higher from this level. So we'll be keeping an eye on how we handle the 618 and cloud and kind of go from there. But yes, this is the left shoulder, this is the head, and we had an abbreviated right shoulder, but it's still there. You would also could call this a bull flag. I like when, I'm going to delete, these lines are valid, I'm just deleting a second. I like when a right shoulder turned to a bull flag, which it did here. So that was a bull flag. Yeah, Eduardo, that's a good point. That's you can see the neckline would be right around 102. So we could dip as low as 102 just to retest the neckline before moving higher again. That's absolutely a valid possibility. And I would advise you to keep an eye on that longer term trend line if we do start a pullback. So the right shoulder turned into a bear flag, or sorry, a bull flag. And we popped higher out of there and continued higher. So there was a nice technical pattern confluence going on there. All right. Then I get to look at Aussie CAD. Trying to move this, my computer's slowing. I'm trying to move this, trying to basically show you that we've completed the measured move of the bull flag as well. Aussie CAD. Okay, so here's Aussie CAD. I've been a lot on Twitter about that lately because it's been frustrating me. This 106 level that we're trading right at is a major resistance level. We punched through it again on this is a daily Chelsea employment data. We could not sustain the breakout. Put in a fairly ugly looking candle that started to have some follow through. Today we have not been able. No, man, John and I are tight. yeah, that's we're talking a lot about Aussie CAD today and how we hate it. Don't ever try to trade the worst pair ever. So we pulled back down to like 105.60 or so. We've not been able to gain this pullback. I don't like Aussie CAD anymore. This was a good opportunity to get short, I think, at 106. Didn't pan out. It's still not panning out. If we get below this intermediate trend line, very possible move lower back towards this longer term trend line around 104. That would be an attractive trade. Until then, the next attractive trade here is trying to fade this major top around 108. I think it's possible that we get to 108. And I don't even think it's necessary for the Aussie to do that well for us to get to 108, just because of how just crappy dollar CAD has been lately. So I'm very close to moving Aussie CAD to my ignore list for a period of time, with an alarm set at 108, an alarm set at like 105.40 or so, just to see if any of those setups set up. But right now it's a fairly ugly pair. Aussie's the higher yielding pair, so if you're shorting it, you're losing money on the roll, and so you don't want to be short this congestion. You'd rather be long, so at least you're not losing money every night. So not a fan of Aussie CAD right now. Your CAD not helping out Aussie CAD. This right here is the chart. We've retested this major trend line here. We're still resisting this trend line here, and we have a supporting trend line that's again in white. So this retest, depending how we close the day, could be an attractive trade to the long side. We fail to close below this retest on the trend line, and we end up with a bullish looking candle. Oh, all right. So Aussie CAD, CAD is the higher yielding currency, meaning that the roll that you pay your broker for being short by owning a lower yielding currency. So like if you notice, if you're short Aussie dollar, your broker takes a small portion of money from your account to cover the fact that they're paying an interest rate differential. And that's what happens if you're short Aussie CAD. You just lose a little bit of money in the roll every night. Depending on your broker, it depends on how much, but it's there. And it also is the reason why Aussie CAD has had a hard time breaking down, is because it's still, if both of those pairs are neutral, you'd rather own the Aussie because they have a higher interest rate. Yep, exactly. Pound Kiwi continuing to drop. What else? Any other questions? What else you guys got? Dollar yen has a low carry. Euro dollar has a low carry. Pound dollar has a low carry. Aussie yen. Oh, I have to look at CAD yen. I didn't forget. Someone asked for CAD yen. This is Euro yen, for the record. We're bouncing or dropping from nice trendline resistance here on the daily chart, so keep your eye on that. CAD yen. All the yen pairs are a little dicey here, in my opinion. CAD yen looks like a flag, to be honest. We're flagging right below a major previous top. Certainly, what that means to me is that if we manage to clear 94.70, yep, I'll look at Kiwi in 1 second. Manage to clear 94.70, there's probably just a ton of stops sitting right here, and it's likely that we squeeze higher towards 97.50 very quickly. So keep your eye out for that. This looks like a flag to me. I'd be keeping an eye on that. I would also like to buy a dip down to 91 or so if we got that at 40. Sorry, 91.70. So CAD yen looks like a bull flag. If we clear 94.70, we should see 97.50 like sooner rather than later. But also just be aware that this is a potential double top forming, and and there'll be a lot of people trying to short this. Whether they'll have any success, I don't know. All right, Aussie yen. Aussie yen daily. Aussie yen, unsurprisingly, one of the more constructive yen pairs. If I was long, I would have. It depends on where you're long from, but I would have some profits taken right now, and I would be looking to buy a dip down to 97.36. Should we be fortunate enough to get it? Aussie yen is less of a flag. To me, it's more of a wedge, which is not. You don't want to be if you're long. Kind of hard to draw that trend line right, but yeah, I would be cautious if we break below 99 and close down there. Could see a dip accelerate a little bit towards 98 first, but 97.36 is major support. So I'd be cautious about staying overly aggressive on Aussie yen longs, especially if we finish the day below 99. And we could rally. It's trading at support right now, so we could rally higher to finish the day and easily finish the day over 100 based on how yen pairs have been moving. But I would be cautious about the way it's acting right now. Kiwi dollar. Kiwi dollar is another one of these ugly kind of messes that's going on here. One second. So we had this breakdown flag that I talked about as being a good possibility to short if we could break lower. We couldn't break lower. We squeezed higher. This is the 200-day EMA. We broke above it, came back down to retest this support area, and we're now headed higher. Major resistance here at this trend line. It's not a clean pair at all. It's been very challenging to trade in either direction. I don't trade silver or gold, Eduardo. They scare me a little bit. Gold, from what I gather, looks fairly constructive from here, but I don't have a chart of that right now. All right, let's delete some of this. So here's what we have on the daily chart of Kiwi dollar. It's just in this ugly, choppy, technically a downtrend, right? So these are the trend lines here, kind of this descending wedge type thing. So technically in a downtrend, but with lots of just spiky action in between. It's really hard to get a handle on. Actually, Kiwi's been really untradeable, dating back to like the beginning of the year, where it's just chop, chop, chop. We're not chopping lower. Yeah, exactly, John. So we get these big sell-offs, then it just rallies. We get a big sell-off, and then it rallies. Then you get another big sell-off. So if you got long on this nice candle, you're like, oh, this is a nice green daily bullish candle. I'm going to buy it. Well, it's going to sell off on you. Or this is a nice green or a nice red breakout candle, daily close below the 200 EMA. Everything looks great for shorts, and we rally. So it's Kiwi dollar is a very challenging pair to trade right now. Aussie is a lot more clear, in my opinion. I would rather sort of keep an eye out. I would rather try to trade that. I would look to try to maybe short Kiwi dollar up here at 82, basically 82.90 or so, as we have this 100-day EMA and this trend line resistance. But technically, it's a downtrend. It's just a very ugly downtrend. Other pairs or questions? This is pound dollar. If you guys want to ask a question or a pair, that's great. I'll do pound dollar until then. We sort of broke out of this wedge. We moved sideways. And then that pound short squeeze started. We busted higher again. This 152 area is the area I'm looking at very carefully for shorts. We will see how we handle these previous tops here around 152 to 152.30 or so. For an eventual, if they respect them well, I think we could see another move lower, probably to clear these lows at 147. We had King, the outgoing governor of the Bank of England, saying things like the recovery is gonna start soon and it'll be a good one, and the pound has weakened enough, stuff like that. That's sort of helped fuel the short squeeze, but it was really just we broke out of this wedge and everyone started piling in and taking profit and just snagged a whole bunch of stops on the way up. The pound, it's very possible that the pound kind of just goes sideways from now until July when Carney takes over, as the markets don't want to make any big bets on what Carney's going to do until he gets there. Expectations are high for him to completely kill the pound. So if he doesn't, it could squeeze another 100, no, more like another 300 to 400 pips higher. But if he does, I'm not sure what the downside potential is for the pound. It's been pretty beaten up lately. So we'll have to see kind of how it trades. I would rather trade the pound against the euro, the Aussie, and the Kiwi than against the dollar or even the yen. Well, he's gonna kill it because he has the reason they're bringing him in is they want to boost the English economy, and one of the best ways to do that are the newest theory on how to do that is quantitative easing programs, and quantitative easing programs are inflationary and inherently damage the pound. That's why we've had this big sell-off, is everyone's anticipating new and creative quantitative easing programs that will put inflationary pressure on the pound, driving it lower. Yeah, there are no currency wars, guys, despite lots of central bankers saying things like, we will intervene in the foreign exchange market if we need to. Other questions? Other pairs? Euro Aussie, maybe a false break below this triangle. It depends on how we finish the day. It's challenging the backside of this 200-day EMA here, as well as this former trendline resistance. Very possible. It's sort of the same situation as your dollar, where it might be putting in a head and shoulders on the top of an inverse head and shoulders, which is goofy, but that's what it seems to be trying to do. Yeah, well, if you're shorting the yen a lot, you're absolutely going to get killed on trades coming back against you just because of how strong, or if you're shorting yen pairs, just how strong this trend has been. A lot of people piled into this short here because it made absolute sense to get short here. We gapped higher, we moved way lower, took out a lot of these areas, and then the market just bid it back up. If I would start trailing stops then, just so you get a little bit out of every trade. It's hard, especially if you're fading major trends, which I think is perfectly fine. It was very valuable here. But you want to protect your profits, because continuation higher is the natural trend of the market right now. So I would be looking to protect profits. You also have to look so Kiwi, a lot of people have been getting killed with trades going back against them. So you kind of have to zoom out every once in a while and take a look and see, like, oh God, look at how choppy Kiwi has been, and maybe set shorter, take profits earlier rather than later, just so you preserve some of your positive trades in a choppy trading environment, which this has been lately. Euro's been really choppy. Aussie's been really choppy. Lots of color switches from strong green to strong red, which is a really strong pain to trade. I'm willing to do a few more minutes if you guys have other questions or pairs that you want me to look at. We've gone through most of the majors. So pips per day is not a great, you don't really want to look at it in pips per day. So what you want to look at is your risk to reward ratio. That to me is the most important thing. So if you have a 30 pip stop, you want to look for at least a 30 pip target, preferably really 45 to 60 pip target. So that way you're winning. You want your winning trades to be bigger than your losing trades. So I wouldn't try to like think of it as I want to book 30 pips a day. I would look at it as I'm willing to risk euro pound, no problem. I want to risk I'm willing to risk 40 pips on this trade, so I want to make 80 pips on it. That's how I would look at it. And because it's too hard to decide. There are some days where you'll be really happy. The market will move a lot. You'll be able to book 300 pips, no problem. Then there will be weeks where the market just doesn't move, and booking 15 pips is a great goal. So if you don't know how to get out of a trade, what you need to do before you take a trade is have you need a full plan when you're, hold on one second. I'm pulling up a free video we have in our education section, and I'm going to post the link because it basically tells you the problem that you're having. Okay, so here is the link to that video. It's a video I put together a while ago. It's called Trading the Setup. It's free to everyone. We have it in our public section. It basically tells you a little bit how to plan a trade so you know when to get out and when to get in. So hopefully that's helpful. No problem. Euro pound. Speaking of choppy, good lord, euro pound. This is probably the ugliest chart I've ever seen, except for maybe like pound CAD occasionally. You can see, look at this. Like everyone here is a great breakdown. We cleared these lows. We should be able to get at least 200 pips lower and higher. Or right here, oh, we broke above these highs, lower, broke above these highs. Take everyone out of the market. Euro pound, God, it's just really just awful right now. I don't even know how I would say to trade this. I mean, that's a breakout, technically. The daily chart is probably the ugliest thing I've ever seen. So that means I'm less likely to try and trade it. But let's drop down to the 4-hour chart and see how it looks here. All right, so this is a little bit of a cleaner breakout here on the 4-hour chart. You can see we sort of just chopped and wedged a little bit higher. We had a nice strong breakout. We're now supported by the 200 period EMA on the 4-hour chart. A nice place to try and get short would be here. We have a retest as well as swing averages holding it down. So around like 86.55. You could have like a 35 pip stop. If it gets up above here again, fine. But you have pretty decent downside down to around 85, 85.30 to 85 even on euro pound. If you wanted to buy it, you could buy it off as moving average support and look about higher. So I think there are opportunities in either direction. But with euro pound, I would be picking my setups very carefully. And I would be getting my stops to break even very quickly. And I would be taking profits aggressively because the pair has not been kind to trend traders here on euro pound at all. It hasn't actually been kind to any kind of tree lately. All right. Other questions? Other pairs? Let's see if there's anything I haven't looked at. EuroCAD. I still like EuroCAD has been a pain. I wanted it to hold, get above these moving averages, and eventually break higher. That was the clean setup. That didn't happen, so now we're kind of stuck with this chop within the cloud. Staying neutral on EuroCAD for a while. Other than that, I've covered the pairs that I have open. So unless there are other questions or concerns, I'm going to wrap this up. All right. Good deal, guys. Thank you very much for coming. I really appreciate it. Thank you for your questions. Thank you for staying until the end. I appreciate that as well. I hope you found this useful and educational. We will be doing these occasionally as we progress through the year. So keep your eye out on the Facebook and Twitter page if you're not a member. If you're a member, we'll post it in the chat room as always. If you're not a member, I obviously encourage you to try our free trial. We do a lot of this stuff for our members. We do weekly and daily. We do daily videos with this kind of analysis. So I certainly recommend you try the free trial. But if not, that's cool too. And I look forward to having you in these webinars going forward. So thank you very much, guys. I will talk to you soon. You can find us. You can find me on Twitter. There's also the actual Global FX Club Twitter account is that. So look forward to talking to you guys soon. Thank you very much, and enjoy your weekend. Have a great weekend.